Hi, I'm Wade Johnson, partner of Cutcher Neale Wealth Management, and I'm joined by Justin Beeforth, advisor and investment committee member, for an update on markets in October. After a bumpy start to the month, stock markets largely ended October on a more positive note. Developed market indices gained 7%, while emerging markets fell 3%. While geopolitical risks remain at the forefront of investor minds, with tension between Russia and the Ukraine ongoing and a newly formed Chinese Communist Party, global supply chain constraints continue to ease and European governments continue to dampen the impact of the energy crisis, which should mitigate the risk of a harsh recession. Having said that, the reality is that high inflation and strong labour markets continue to support hawkish action from central banks, with China and Japan the notable exceptions as they continue to pursue expansionary policy measures. In Europe, the European Central Bank raised interest rates by 75 basis points after the headline inflation rate jumped to 10.7%, while in the UK, Rishi Sunak was nominated as the new Prime Minister, the third candidate in the position in just 44 days. The US economy showed some signs of softening in October, with a slowdown in both housing starts and home sales. In Australia, the RBA slowed the pace of interest rate rises, opting for a 25 basis point increase with the foresight that monetary policy operates with a lag, and approximately 35% of Australian mortgages are fixed in the 2% region. The term of those fixed mortgages will largely roll off in 2023, and those homeowners will face variable rates of at least double their current rates. Justin, how are the Cutcher Neale portfolios positioned?
Thanks, Wade. From an asset allocation perspective, the investment committee is repositioning back into a stronger Australian equity exposure, given a favourable domestic outlook and the protection that this allows us from a weaker Australian dollar when trying to invest internationally. The committee increased international equity positioning in Japan on the back of favourable exchange rates and a stable economic outlook, while moving to an underweight position in the US, given continued strength in their currency and an overpriced outlook relative to other investment options. In domestic equity markets, the committee maintains a large position in iron ore and lithium and is currently underweight the banks, given their high valuations and the potential for bad debts as the interest rate rising cycle progresses. The bond portfolio remains 70% floating rate in nature, with that portion of the yield adjusting to interest rates as the RBA progresses its slower for longer pathway. This protects our bonds from devaluing, as fixed bonds suffer in a rising interest rate environment, given the more profitable alternatives issued. Overall, the portfolio's enjoyed a boost, given a favourable end to the month.
Thanks, Justin. Please call your advisor if you have any questions, and we'll see you in December for another update.